Good evening, everyone. This is Dana from NexGen. And on this week in Me Inc., we're going to be talking about ways that we can stop tipping our banker. Now, earlier you saw that we provided ways that we were tipping our banker. Not all of us, but some of us. So, what I'd like to do is give you a definition of those ways that we're tipping the banker, and then also provide some alternatives or some ways that we don't have to pay these fees. Because keeping your money in a bank or even a credit union shouldn't be expensive. You should not be paying for someone else to hold your money, because I can promise you the money that you put in there, the banks and credit unions are lending out to other people. So they are getting money. So if you remember in when we did the family bank, I talked about the difference between banks and credit unions, these financial institutions, and who they're really there to serve. One is their shareholders, and the others are the shareholders, the ones that depositors that put the money in the credit union. So I want to go over some definitions of what we mean by these tips or fees, and then ways that you can avoid paying them, if at all. So let's go ahead and start with my all-time favorite, which is a monthly service fee. Now, you usually see this in brick and mortar banks. And what it is a fee that they charge every month to hold your money. Now, a lot of times they can waive these fees by saying that you have to keep at least $500 or $1,000 or have 10 debit card transactions per month to avoid paying these fees. Also, some banks will say that you have to have a direct deposit at least every month to waive that fee. Now, some credit unions don't, a lot of the credit unions that I've dealt with don't have those fees. The only thing you would need to do is maybe pay $5 in the savings account. So if the bank that you're dealing with charges you a monthly service fee, know that there's ways that you don't have to pay that. Either keep the minimum balance in there. I'm not a big fan of debit card transactions, because you may not need to make those debit card transactions. And I'll kind of wrap up some of the things that you can do as opposed to that, or maintain the balance. Of course, remember, in the checking account, the interest that they pay on the on the checking account is very small. So that's one of the things you want to keep in mind. Then we have what we call the overdraft fees. And you may be saying, well, what's an overdraft fee? An overdraft fee is what the banks would charge if your checking account balance goes below zero. This can happen intentionally by not paying attention to the balance in your account, or there could be some fraudulent activity. So let me give you an example of an overdraft. An overdraft would be if you had $100 in your checking account and you either wrote a check for $105, or you used your debit card and you charged $105, or the total amount was over $105. Just know that that is what we consider an overdraft, because it takes the balance below zero. So if you have $100 in the bank and you charge 105 on your debit card, let's say, then it takes the balance to -5. So it makes the balance go in the negative, if you will. So when that happens, the bank charges $30 to $35 each time you overdraw. Now, keep in mind, even though you went below the zero, they're charging you for each time it goes over. So let me give you a quick example. You have $100 in your checking account. You do a debit of on this one occasion 101 because you weren't paying attention, for example. That takes the balance below zero. That's an overdraft fee. Then you charge something else. Let's say it's $5. That's an overdraft fee. So that's $70 right there when you actually only went over $10. So that's an example of an overdraft fee. So what are some ways that you can avoid overdraft fees? One is pay attention to what you have in your checking account, because overdraft usually occurs in the checking account. You could have what they call overdraft protection option. Now, overdraft protection, I'll talk about what that means, that you can have set up. But I would recommend that you pay attention to not going below zero in your checking account. All right, let's talk about overdraft protection fees. So let's say that you do sign up for overdraft protection. A lot of times banks charge a fee for that because they consider overdraft protection sort of a short-term loan. So instead of either, let's say that you go to the grocery store and you only have $100 in the bank, and you go to use your debit card and you charge $105. So one of two things can happen. Either the transaction will be rejected, or if you have overdraft protection. Now remember, you're probably going to be still charged a fee for that. And then the bank has a charge of either, the bank has a decision to either reject the charge, or if you have overdraft protection fee, then they can come in and pick up the difference, and they consider that a short-term loan. So you're actually going to be paying a fee for that. So that's why it's really important for you to pay attention to overdrafting your account. Now, the overdraft can come from your savings account, or it could come from their short-term loan. Either way, you want to find out if your bank charges you for that overdraft protection. Another fee is what they call insufficient funds. Now, this is insufficient funds fee. This is very different from an overdraft fee. You'll pay an insufficient funds fee if you overdraw your account and your bank denies the transactions. So if you, as I said before, when you go into the grocery store, you have $100 in your checking account, you don't have overdraft protection, and you charge $105 or even $101, the bank will consider it insufficient funds because you don't have enough money. You don't have overdraft protection to pull more money in to make sure to cover that purchase. So what they will do is deny the transaction and charge you a fee. So it's pretty much similar to bouncing a check, if you will. So the way to avoid insufficient funds is make sure that you have sufficient funds in the bank or enrolling in overdraft protection. But again, enrolling in overdraft protection could come with a fee. So you want to make sure you're paying attention to that. And when you sign up for your bank, at the time you sign up for your bank, these fees may not come into play. So you always want to pay attention to the notifications that you receive from your bank to find out if one thing that they were not charging for, they now decide they're going to charge for. So you really want to pay attention to that. Okay, another fee is what they call an out-of-network ATM fee. So banks usually have an ATM network, the ones that they have agreements with. And if you go outside of that, they will charge you a fee. And that usually ranges from $2 to $3 or even more per transactions. So these are some ways that you can avoid that. Usually you can pick a bank that has a large ATM network, or you can just not use the ATM machine to take money out. This is definitely your choice, but just know that these fees add up, and it also reduces your balance. So you want to pay attention to that. So again, let's go back to the $100. You go you have $100 in your bank account. You go to an out-of-network ATM to withdraw, let's say, $20. They're going to charge you, let's say, $5. So that reduces your balance from 20 to 25. So that's why you want to pay attention to those out-of-network ATM fees. Now, the cousin to that is the foreign transaction fees. And this is the foreign transaction fee that is charged when you use your debit card outside of the United States. And it's usually 1% of the purchase. And the debit card will have either a Visa or MasterCard logo. So it can range from 1 to 3%. Again, further reducing your checking balance. So my recommendation would be to either not use a debit card, but use a credit card that does not charge a foreign transaction fee. So those are some things that you can do, or you can bank with someone that doesn't charge it. Okay. Then we have what we call excessive transaction fees or excess transaction fees. And that comes about when you have your savings or let's say your money market account. You're restricted to six transactions or 6 transfers per month. And if you go over those 6 transfers per month, then the bank will charge you a fee. So if you remember when we were talking about Angela and how she did her money, she moved her money from her savings to her checking once a month. So the way to avoid the excessive transaction fee is to pay attention to when you're doing it and using your checking account instead of your savings account to pay your bills. Another fee, and this one may be unavoidable depending on the transaction that you're doing, is what they call the wire transfer fees. So let's say that you have a friend that you want to give money to. So the fastest way to give them money is to do what we call a wire transfer. So the money comes from your account and it goes to your friend's or family's account. And that, if they do it with a wire transfer, that usually comes with a fee. And sometimes it's on both parties, depending on where you send it. So let's say that I am sending a wire transfer to someone. The bank that I deal with charges me $30 to wire transfer it to someone else. The person that receives the wire transfer, their bank can also charge them a fee for receiving the wire transfer because it's pretty much instantaneous. So usually people will do wire transfers when they're doing a real estate transactions. And I definitely want to caution you on that. Because a lot of times when you are wiring, you want to make sure that you're wiring, because it's instantaneous, you want to make sure that you're wiring the money to the intended party. Because a lot of times you could inadvertently wire the money to the wrong party, and it's very difficult to get that money back. So if you absolutely have to do a wire transfer, I definitely stress caution when doing it. So let's say that you do have options to do the wire transfers. Then a way that you can transfer money from one person to another is either Venmo or Zelle. And also, let's say that the person is banking, you and the person have the same credit union or bank. Now, with, for example, Navy Federal, it's what we call a member-to-member transfer. So if the person you're transferring money to, you and that other person have the same bank, they can just transfer the money to that person's account without a fee. Now, I will tell you on banks, for example, well, I won't name the bank, but they actually charge a fee because it's a wire transfer, even though they're in the same bank. Again, when you're, and the other thing too is a lot of credit unions, when the person is receiving the wire transfer, they don't charge them for that. So what you want to do is you want to find out from your bank or credit union what the fees are for doing a wire transfer. And if you have to, keep that in mind and build that into your, account balance to make sure you're paying attention to know that that 15, 20, or $30 is coming out. Also, if you can transfer the money without doing the wire transfer, that's one fee that you don't have to pay. Another fee is what we call a paper statement fee. Now, a lot of banks provide a digital bank statement as opposed to a paper. So to encourage their clients to not receive a paper statement, they charge a fee. Now, a lot of times people feel more comfortable receiving a paper statement. Now, again, if you want a paper statement, one way to avoid it is to, because you're afforded the opportunity to get a digital bank statement, my recommendation would be to pull it up and then save it to your computer or to another place on your computer. That way, if you want to print it, you can do so. That's just one way. And if you still want to receive a paper statement, just know that you would be charged a fee for it. Then we have what we call a lost debit card fee. So to me, debit cards are pretty much a digital checkbook, electronic checkbook. So with a credit card, your credit card may be replaced for free. And sometimes they would even send it to you express delivery because they want you to use that credit card. The debit card is a little different. They will charge you a fee if you lose your debit card because, again, that is actually tied to your checking account. So what I would recommend is, this is just my recommendation, is reducing the use of your debit card so that you don't have to keep taking it out as much, or making sure that you're paying attention to where your debit card is. Again, you want to periodically monitor your banking accounts to make sure there's no fraudulent activity. Because a lot of times there are situations where if you go to an ATM or you use your debit card, they may be some unsavory characters that would actually steal your information so that they can take the money out of your banking account or your checking account, or even your savings. Then we have what we call inactive fees. And this is usually happening when you don't use your account for at least 6 months. So if you don't use your account and nothing's happening, you could be paying up to $20 a month. So my recommendation is that if you don't need that account, to consider closing it, or periodically or every month putting a deposit into that account. And we can consider it a makeshift savings, if you will. But just know that if you have a bank account that is inactive, a checking account that is not active, you could inevitably go below your zero balance and actually pay money just for the bank to, in effect, babysit your money. Then we have what we call the account closing fee. And that usually occurs when you close the account within 3 to 6 months of opening it. And you could pay $25. Now, usually this occurs when they have a special where they're giving away certain things for you to open the account, the bank account. You open the bank account and then you find out that the features that they have you don't particularly care for. So you close the account. And if you close that account within 3 to 6 months of opening it, they could charge you a fee. So how do you avoid this? Well, first of all, find out if there is a fee for closing that account within a certain period of time. Also, you want to find out the different features that we talked about and the different fees and the different ways that you don't have to pay these things. Now, one thing that I want to suggest to you is if instead of using a debit card, this is just a recommendation, instead of a debit card, use a credit card with that bank. That way it's not tied to your checking account. And you don't have to worry about the fees because usually the limit on your credit card is higher than the balance that you may have in your checking account, hopefully. But this is one way of reducing or even eliminating these fees, because why would you want to pay someone fees for the money that you earned? So hopefully this information was helpful to you. So I will see you next week. And if you have any questions, please make sure that you put it down in the comment section. And don't forget to like, comment, share, and subscribe.